amid scandals plaguing the bank. The former Visa CEO and current Microsoft board member will officially start his new role on October 21, taking over for interim CEO Alan Parker. We welcome New York Times columnist and CNBC contributor Jim Stewart. Talk about that, the IPO market, and a bunch of other things. Happy Friday, Jim.
Good morning.
Good hire. You think it's a good hire?
Well, I do. I did a fair amount of work on Wells Fargo, the scandal, the peak of all that. And there was something that really struck me there was how pervasive it had become in the culture that they wanted yes people. They wanted people who did what they were told, didn't ask any questions, didn't raise any concerns if they thought they were crossing the line into legality, which I find in any company is a huge red flag. I mean, the people who tried to do something about that, fake account scandal were all punished. Some of them lost their job, they were demoted, they were shunned. I mean, the message to everybody else here was loud and clear. Toe the company line or you are out of here. And that I saw that going all the way up to the very top. And I don't think you can change a culture like that with an insider. I don't care how well-intentioned Sloan may have been. He knows all these people. They all were, breathing the same air and drinking this water, which I think goes way back to the Norwest days. It's going to take somebody at the top, and there's going to have to be a lot of house cleaning there.
Aside from being an outsider, I mean, he's got to essentially allow the bank to grow again. I mean, he's got to get permission for the bank to grow again. So.
Well, yeah, I mean, I will say, again, one good thing I'll say about him, and the bar is pretty low here. He emerged from the financial crisis in the ensuing years without being seriously tarnished. And he's a veteran banking executive. I mean, maybe, it's really good for him that somehow he kept his head down. He's hardly a household name. I mean, the average person, and, Mellon, Bank of New York, that's a kind of, under the radar sort of institution. Now, it will be interesting to see, can he leap into the retail banking world, which you kind of think, oh, what's so hard about retail banking? But then I was thinking, whoa, wait a minute, there's a lot going on there, particularly with the, digitization of a lot of the work, the continuing shift to digital, the kind of upstarts nipping around in the retail space. There are going to be some big challenges in adapting to this new world.
Perhaps no bank has gotten more scrutiny, though, from at least one senator we know well, Warren, and others, than Wells. I mean, is it your sense, we were going through his compensation earlier, that there is going to be still something to pay there in terms of dealing with Congress and or Senator Warren?
I think maybe how many more pounds of flesh can you take out of them? They've been beaten up so much, and again, I think what we saw in that whole saga was this amazing disconnect between Wells Fargo and this sort of bubble they were living in and the rest of the world. They had the stamp of approval from Warren Buffett. Investors loved them. They kept putting out all the good numbers, and they were like just untethered out there, I guess, at their headquarters. I mean, when they went to testify in Congress, it was like they didn't know what hit them. And I was kind of shocked at how, after all the financial crisis and the criticism of the banks, and I mean, you knew where Warren was coming from, how ill prepared they were for the realities that were going to face them. And I think they're facing up to it finally.
Jim, want to turn to the IPO market a bit. We had Peloton yesterday not performing well. Endeavor delays. WeWork, a total rejection by investors, leading to a lot of other things there. What's your sense in terms of what it may be telling us?
Well, I think it's healthy that investors are discerning. What would really worry me is if people are just throwing money indiscriminately at all these things and hoping that something's going to stick and do well. I mean, I think people are scrutinizing these individually. Again, I think there's kind of a theme here, which I've alluded to before, which is the more sort of sophisticated and technological and difficult the business is to understand, in a way, the more of a, more slack investors are going to cut. But if you're talking about exercise equipment, I mean, doesn't everybody know somebody whose basement is filled with the exercise equipment of yesterday? My dad actually had one of those belts that you stood on and wiggled, and that thing was collecting dust in our basement for years. And that was the hot exercise thing and weight loss device.
70s, I think. Yeah.
Maybe, whatever. So, I think there's a lot of skepticism, and for good reason, with something like that. And then you start drilling down into the numbers. You've got money-losing companies. Well, what's the growth trajectory? What's the loss trajectory? You don't want to see the losses going up from quarter to quarter, which is, what some of these things are showing on their income statements.
Mike, used to be a really a bad thing when you broke syndicate bid day one. Now it's like the rule.
It's almost like, you have to price it at the high end of the range and say everyone wanted in on the first day as opposed to, but it shows you though, they seem to think they actually were being conservative in the pricing. Honestly, it's how much they've raised privately, all these companies, and therefore it sort of sets the bar for their minimum in their head for what they should be worth in the public markets. And I just wonder what the blowback effect is going to be there in terms of private investment and the assumptions you make if this isn't really your exit ultimately.
Well, I kind of look back now at the Snap offering, and I think and maybe that was the high watermark of this, because I remember looking really closely at those valuations and scratching my head, and really even by the most optimistic projections there, I couldn't get much higher than 25% of what they did get out of it. I mean, that number was just off the chart compared to earlier IPO eras, and then everybody I want that multiple, bring me that, and that could not have been sustained.
I mean, I think you could even go back and say that, Facebook's rough first 8 months was because they insisted on $100 billion out of the gate, right? So, I mean, on some level,
they had some execution issues on their end, as we all know.
Yeah, and then, it took them 8 months and really, an unlikely kind of turnaround in strategy to get them where they are.
I do think a really interesting question, which some people are now raising, is as the IPO numbers are going down, what does that do to the whole venture pipeline? Because it's all about, what's your future return when you put that first dollar in to help one of these startup things? Is this going to chill innovation out there? It's going to chill the ability to raise money. And I suspect the answer to some of that is yes. But again, that's not so bad either. I don't think you want these big institutions, investing in the venture funds and then just throwing their money indiscriminately. Are really, really not very sound idea.
There is a